Hey, welcome everyone. Tom here, Park Avenue Forex. Going to talk about Fibonacci wave count and how we can use certain ratios to help us figure out where we are and make good, unbiased trading decisions with those levels. I think that this will offer a clue to certain traders that are kind of new, don't really know where to begin, don't really know like where the marketplace, what position they should be taking, how they should be looking at the marketplace. Is it in a bearish mode? Is it in a bullish mode? Because what I find out is a lot of people, they fight yesterday's battles. And what I mean by that is that now this is a 4-hour chart, and we had a run up. Movement up. Okay, so the place to actually be looking to buy into it was on the dips. Okay, and then the market's moving up, and generally what happens is this: we make this high here, and people are still fighting, the past battles, and they're buying as the marketplace, starts moving away and down, and can't understand what happened. So they're basically stuck in yesterday and not really looking at what's going on today, because they don't really have any way to analyze it. So this is a good way to analyze what's happening in the marketplace. And it is a completely objective way to do it because we have certain counts that we need to happen. So here we go. Without further ado, we're going to be using, this is sterling US dollar. The date that we're starting with is September 1st, 2020. 4-hour chart. I don't know if I said that already. And what I'm basically doing right here is I'm looking for a 21 bar high. And I'm finding it right here. Now, we could have been doing that all along. However, every time the marketplace spiked up and went higher, we realized that we didn't have it. Okay? So, as we move forward, okay, the first criteria that has to be met for this count is an 8-bar low. 1, 2, 3, 4, 5, 6, 7, 8. This is a low. However, that's not in until there's a 5-bar high that is recorded after that. We need a high that's a 5-bar high in order to lock that bottom in, say that's wave 1. Okay, so this bar comes in here, it's a 5-bar high. 1, 2, 3, 4, 5. Okay, it's a high higher than the past 4 bars, so it's the 5-bar high. All right, now here is the trick. This is where it's a very cool trick, which I put the picture up. Let me see if I can do that. Let me see if I can actually go back in and look for the picture to put up here. And all right, it's going to be on my drive E. So hang on here, and that's not the one. That's ClickFunnels, learning how to use that. All right, hang on. Okay, so here's the picture that I put up on the Facebook Forex Syndicate. Here is the ratios. I hope we can see these, or actually not ratios. They're basically what we're doing is we're taking the difference of the first price leg, because once we find 0.2, we can now make price projections based off of the wave. So we would take the high against the low of this, take the difference, and we would multiply by specific Fibonacci ratios. And these are the ratios that are only used for a Fibonacci wave. And you'll notice they're pretty big. You would take the difference, which is 223 pips, and we're going to multiply by 0.618 and get 360 pips. Then we're going to take 223 pips and multiply by 2.618, you get 584 pips. And then we're going to take 2.236 and multiply by 3.618 and get 806 pips. You could actually continue this and go with 4.618, 5.618, 6.618. Obviously, those are very, there's a huge trend change if that occurs. Generally, most of the time, I have seen it stop at the 3.618 ratio. Now, I'm not just saying that because a double bottom formed here and it actually started moving up. That's basically like the end of a pretty big move that's going to just consolidate. Not saying that it's going to turn around and rip roar the other way. It's just going to consolidate. Usually it's around 600 pips, something like that. That's where I find it. So an extension even to 8 is kind of like, wow. Okay, so I have to backtrack. I have to talk out of both sides of my mouth. I've seen it stop at, say, the 2.618 because it's about 600 pips. And I've seen on the extreme the 3.618. But anyway, just moving forward, that's what the lines are on the chart. Now, let's talk about this, okay? Because let's talk about what I said in the open, and let's get rid of that. So a lot of traders don't know what to do. Like, if they're fighting yesterday's battle because they have no analysis, they're gonna lose money. They're absolutely gonna lose money. By the time they recognize that they should be selling it, it's probably gonna be down here. When they do, and it's gonna rally back up to this point, and then hurt them again. Because trading is counterintuitive. I can't say that enough. It's counterintuitive. So you really should be looking for the next move of significance after something has happened. So in other words, you want to use the market's giving you clues. And with the Fibonacci wave count, you can basically help try to decipher these clues. So let's say, for instance, you get very well versed in this trading style or system, and you find this low here, which is an 8 bar low, only to be confirmed by a 5 bar high. Now, people are confused, probably getting confused already. Say, what do you mean 8 bars? 8 bar low, the one that happened here. 1, 2, 3, 4, 5, 6, 7, 8. Yeah, that's an 8 bar low. However, it wasn't qualified because there wasn't a 5 bar high. In other words, there wasn't a rally to basically confirm this. So what these points are doing are confirming supply and demand points. So here's a demand point that occurs in a 4 hour right here. Okay, after this bar comes up, here, this is the 5 bar high. This is the supply point. So if I wanted to, in reality, what I could do is say, okay, look, I got this point. I don't know if it's going to hold. I could do some quick analysis and say, all right, let me do this. This low is lower than that. So let me put up a trend line right here. Okay. And now I have, a trend line. Market breaks, we could use all the trend line qualifiers because we know that this was a down close. Most likely the first attempt down is going to be a failure because if I measure the distance between the close and the high and then add that to the close, it's definitely beyond this. Using buying pressure and selling pressure, using the selling pressure of this bar because it's already down close. And we know that if we want a good break on a trend line, we would prefer to see an up close. Okay, and we have an up close here, and finally the market breaks down. But here's the key, the telltale key. It opens up below the trend line and pushes down. So we can use trend line analysis right here if we wanted to. There are other ways that we can look to sell this, and like we could use a Fibonacci strike off of this bar. So we have a close here. We measure the distance of the bar. Fibonacci strike says take 0.382 of the range, throw it across. If it breaks down, that's a decent sale level. And really what we want to do is we want to get below this pivot and close below it. This pivot low. Okay. Now let me do that as well. Let's just point this out here too, because this was the demand point. Okay. So demand turns to resistance, or demand turns to supply. Okay, if you want to say it that way. However, we need basically a close and an open below this. All right, so here it is. Market comes down and it fails. It's just basically still fighting yesterday's battle. These are guys fighting yesterday's battle, which was the rally. we can't surpass this high. Okay, so that's a clue to weakness. All right. However, I would always say that the first crack in the glass was that this low was pierced. If this marketplace truly was going to go back up, this low should not have been broken. It should have basically come down to it, touched it, taken off from it, and used it as support. You know, and I'm talking, the way I look at it, if it's like a 3-tick break, I say, something's wrong, because it just shouldn't happen. I know you say, it's ridiculous. No, it's not. I'm telling you that if you go back in time and you look, when markets are turning either up or down, they use a certain point, and they basically use that point for a good amount of time. So this was the first indication when we got the break below it and close below it, and then the open below it. That started the next leg down. Okay, so by knowing this count, we have an ability to be able to take an objective trade by selling the marketplace at a reasonable price and not getting caught in any of these movements, you know. All right, so the next low that we're looking for, now this level right here, this 137.82 is basically the 1.618 from the 2.236. The difference between this high and this low was 2.236. When I multiply by 1.618, I got 360 pips. I'm taking the 360 pips off the top of this bar, 141.43 and 3.60 out. Gives me a price of 137.83. Okay, 137.82, same thing. Market comes down through this. The wave pattern's not even finished yet. We haven't even found 0.5. So therefore, when we pass through this 1.618, it's showing weakness. And not only that is it showing weakness, it's showing that because the wave pattern hasn't finished yet, there's more to the downside movement. Hope that makes sense. So remember the last one that we put up, we had a target of 1.618, and it basically touched into it and then turned. But the wave was also finished in that last example, that last video example. And then we had an issue. I had an issue. I said, well, I'm not getting the ABC pattern, and that's threw me off. I mean, that would throw me off, but I also had a 21 bar low that occurred, and then the market rallied and started over again. So the whole pattern started over again. Now, this is where the ABC pattern can help us if we don't get a major movement back up. So let's let me try to get my thoughts straight here. I'm sorry. I don't mean to confuse you. I don't mean to sound like a babbling crazy man. But we get the 3. This 0.3 is what? This 0.3 is a 13 bar low. Right? Now, in order for me to confirm that wave 3 point is in, I need an 8 bar high. And it's right here. Okay, so this is confirming this pattern's in. Now, this is doing the same exact thing as we were doing up here. So basically, we would find a trend line if we wanted to, okay? And this would be a very nice break of a trend line. So I'm gonna look back in time to see if I can find a lower low to work off of. And I do. So, but let's just do this. Let me just do a not truly traditional trend line. You know, let's just say the line is coming in through here. Okay, we have the upward here. Okay, it doesn't break the trend line. This one really was saying it should have failed because we have a down close, but yet it did push. And what did it do? It created a head fake. Okay, right here off of these bars. So we have a head fake working for us. All right, saying that this bottom here. Now, what is this level? This level is the 2.618. This is the 500-point move. from here. 500-point move from here. Okay? Now, this is also a 21 bar low. This could throw us off at this point saying, okay, this wave has ended. Okay, so now we have to be suspect of any pushes. Okay? Now, remember what I said before. The break of this level is telling me that we're still going lower. Now, that's just one of my rules. You can do that yourself. You can look, place a line up, a measured line, and see. Even if it breaks by like 3-4 pips, it's basically a precursor to a movement lower. And if it's obviously if this was the move, upward, right, a break above this saying higher. However, it doesn't. As we're moving in a downward moving market, that basically is, and I'm looking for the point to lock this in. All this up here is, basically just, a great place to sell. This was a gift to sell up in here. Okay, not here, but up in here. Okay, because we have this points confirming this, so this is a good place to sell. Now you could also do the same thing. You could do a Fibonacci strike off of this bar. It's upward close. So hopefully you guys know the Fibonacci strike. I'll go over it on another video, but I don't want to make these too long. So we have the breakdown here. Now, how I'm saying that even myself, I'd say, wow, okay, I have these breaks here. I'm probably showing weakness. But this is where, if this was 0.5, if this was 0.5, and let's do this. Let's say we think that this is 0.5 because we don't know. Potentially for 0.5. And we're going to put a little question mark because we don't know. We need something to happen for 0.5. Now, we're also at a 21 bar low. All right? Notice this. We do not break above the 618 level. If we broke above the 618 level, I would say, yeah, that's 0.5. But before that would happen, I guarantee you that we would have the ABC pattern. Now, the ABC pattern off of a 0.5 would be, I would need a 13 bar high, okay, and then followed by an 8 bar low, and then another movement down for a 21 bar low, okay? So I don't get it anywhere here. I don't get any of the 13, no 13. Now, if you wanted to, you could use an 8 bar high, 5 bar low, okay? But truly, it all depends on, if you're aggressive, you'd want to use 8 and 5. Okay, but you'd still have to be cognizant that we haven't broken above this 618. Okay, but let's just stick with the 13. Okay, so 1, 2, 3, 4, 5, 6, 7. Nope, it's not higher. Okay, what about this one? No, I don't have 13. I don't even have 8 here. Do I have 8 here? 1, 2, 3, 4, 5, 6, 7. No, I don't even have 8. So I don't have it. Now, I'm still looking. I'm not getting any 13 bar high or an aggressive 8 bar. 1, 2, 3, 4, 5, 6, 7, 8. I still don't have it. I don't think. Let's see. That might be 8. Now, then I would need a 5 bar low, which would be here, and then a 21 bar low, which would be here. Okay, so that would actually work. But let's just stick with the 13. So once the marketplace breaks down through this, I know that this is not 0.5 anymore. This could have a potential to be 0.5, but I would need a 13 bar high and then, an 8 bar low. I don't have it. This line is the 8.06. This is the 2.236. The distance between this high and this low multiplied by, 3.618, giving me 806 pips from the top of this. It's right here. It's this line. Now, again, breaking this line, saying, wow, we could potentially go lower. All right. However, if I move my 5 here, and I'm looking for my qualifiers now, I need a 13 bar high. If I take this, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. I don't know. Is this 134.56? What's this? Yeah, 134.60. So I have my 13 bar high. Now I need my 8 bar low. And I think I'm going to get it here. 1, 2, 3, 4, 5, 6. Nope. 7, 8. No, I don't. Let's go. Let's go here. 1, 2, 3, 4, 5. Nope. No, if I have 5 here, is this a 13 bar high? I don't think so. 1, 2, 3, 4, 5, 6. Nope. Here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. This is definitely a 13 bar high. And now I need an 8 bar low. One, two, three, four. Nope. I don't get that 8 bar low. But I'm going to say that as soon as I break up in here, this is locking this in. So if I use my other method, 8 bar high, I definitely have it here. 1, 2, 3, 4, 5, 6, 7, 8. 8 bar high, 5 bar low. 1, 2, 3, 4. Nope. 5. Okay, so here. 1, 2, 8 bar high. 8 bar high. 1, 2, 3, 4, 5, 6, 7, 8. And then quickly 5 bar low. 1, 2, 3, 4, 5. And it's here, saying, okay, this is 0.5, and we should be moving back up. But also the break of this Fibonacci level is showing that this is in and the marketplace is moving up. Now, this is where we are today. Look how the market stays in between these two bands that we predicted way back when, on September. Let's just move back right here on this date, September 1st, 2020, based off of September 3rd and September 4th. We predicted this channel that the marketplace is now trading through. Pretty interesting and amazing stuff. So, if we were fortunate enough to get short here, and we're counting the waves, and let's say we were very aggressive and we got short here again as well, okay, and we break down and we're right here, there is absolutely no reason why not to just escape the trade here, or at worst here, as soon as it touches here. So you're looking at a potential of 800 pips profit with this small little technique, and it's not, there's no subjectiveness to it. Now I'm going to do one other thing, and I'm going to tell you, I have not really had any success with a Fibonacci time series. And I would like you guys to do this. If your homework per se would be like, learn how to do these waves on a 4 hour, 1 hour, whatever you want to do it on. Just, you know, follow the rules. Okay, very simple. But then what I'm going to do is this. I'm going to, for the first time, I'm going to try to use this Fibonacci time series time zone. And I'm going to say, okay, here's the origin, right? The completion of wave 1 is here. So now I started looking at this, and I started to see that, oh, look at this. This was 2, like this bottom turned in, and then look, here was 3, and here was 4, you know, and well, here was day 3 off of this series. Look, consolidation here, okay? I'm getting something here. So I'm getting bottoms here that potentially I can buy and sell, you know, just for quick profits. Like, you know, if you bought 135.57, you had a chance to sell 136.57. That's 100 points. And it holds for a while until finally it breaks down. Let's see where we are on day 5. Now, day 5 gave us an indication, is this 5? right? This is where I said, well, we're down at the 3.618 here, and it's basically almost right on. Now, this is only one example that doesn't prove anything, okay? So, but it's just something to look at. And it's like, this is now an objective way to put the Fibonacci time series on a chart, because most of the time, people don't know where to put this thing. It just looks really cool. You know, I mean, you know, if you're a single guy and you got your charts up in your room and you're bringing your chick over and you got this stuff up, I mean, that looks awesome. Like, what is that? Oh, look at these lines. Well, 1, 2, 3, 5. Why does it go to 5? You know, why is it 3? Where's 4? Oh, no, you don't understand, baby. You don't understand. This is Fibonacci. You gotta basically add the last two numbers to get to the, what? What are you talking about? Oh, you don't know? Oh, we're going to go to, we're going to go to 8 now. What? 5, 8? What's that? Anyway, so there's the little idea for you. And like I say, enjoy the party, dance near the door. Please check this out. Please try to put some examples up. Come on, man, get involved. Cheers.